Good day everyone, this is Patrick from EasyFX Code Trading System, and it's Sunday the 3rd of November 2019, and this is the weekly analysis for spot gold and dollar yen for the first week of November. Let's take a look at spot gold, and the last couple of days has been very bullish after dipping lower past the weekly S1 pivot, and after forming a low at 1481.19, it managed to bounce and recover, bullish reversal at this area, back above the daily 55 EMA, and then punched through the 1500 level and almost hitting the next resistance here, and hit a high of 1516. So it's just below this intermediate resistance zone and the 62 pip retracement level. Let's take a look on the weekly time frame, and you can see the long wick from below with strong buying and pushing all the way up with a bullish close for the week. So the sentiment is definitely bullish in the short term. However, you will need to break through the 1517 and then the 1520 area so that it can push up towards this next key resistance zone. Let's take a look at the 4-hour time frame, and this was the previous resistance where it broke through above the 200 period EMA, and this was the previous intermediate support where it fell through. That was during the announcement that the Fed was cutting rates by another 25 basis points, but initially spot gold weakened and retested the swing low in this area before it managed to gather momentum to recover and push up higher, and in a reversal mode, push up all the way, continued on Friday as well. After poor, actually it was a good NFP figure back lower, but then just an hour and a half later, the ISM manufacturing figures was worse than expected, and then it spot gold recover back up its bullish momentum. So this intermediate resistance zone now is for the meantime is just acting as intermediate support. So we can remove this one out, and we can mark this as a support zone now. And that was where the weekly pivot was just above the 1500 level as well. We'll see the weekly pivot move up for the next week. We'll probably move up slightly. Let's go back to the 4-hour time frame, and let's adjust this lower to align with some of the other swing lows here. And I think we can remove this trend line. So the fib retracement levels are still valid, and it's consolidating between the 21 fib retracement level and just below the 62 Fib retracement level. So although it's a fairly wide range for over almost 400 pips, and looks like this is consolidating into a bigger ascending triangle. Right, so where the resistance is at the 1517 level, so it needs to break through, and we'll see whether it can continue higher towards this next resistance zone at the 1534 area. All right, there's only one news coming out of US this week, and that's on Tuesday night with the ISM non-manufacturing PMI. Other than that, there's no other key news for next week from the US. So it could be less impact from event risk and more technical trading, hopefully, for the week ahead. Okay, let me make one more check here. So let's mark this area as the key resistance, intermediate resistance zone now, in the 1517 and 1519 or 1520 area. Okay, so let's move on to dollar yen, which should be the inverse. And on Thursday, I already highlighted that potentially dollar yen could turn bearish as it was being squeezed into the apex of this ascending wedge here, and it did fall through on late Wednesday, which was the Fed decision, the FOMC decision to cut rates. Initially, it pushed up higher to hit the 138 extension, Fib extension level, but then was rejected and fell outside of the lower trend line and continued falling on Thursday down to the monthly pivot just below the 108.00 level, and also where the daily 55 EMA is, and consolidated for on Friday. Let's take a look at the 4-hour time frame. So this was a key turning point. So there's potentially a reversal now for the US dollar and especially dollar yen. We can remove this area. This was the previous resistance of the ascending triangle where it broke up from and then fell through. So this is now going to be the intermediate resistance, and we'll see how much it will be able to retrace at the start of next week, and we'll be looking for shorts and potentially targeting the next Fib level at the 62 Fib retracement area. Let's take a look at the daily time frame first. So this Fib reversal has hit the 138 Fib extension. We can actually move this now to show the latest swing high, and it did fall to the 50% retracement level already. So we're looking to see whether it can move on to the next level, which is at the 62 fib extension level around 107.55. If we left it here previously, if the 50% fib retracement would also be around there at 107.48. So 107.50, that's the key support level now. Alright, so let me mark this 62 fib level at 107.50 area, 55. So this will be the next key support level. If the monthly pivot gives way, and also monthly pivot is already just below the 108 level, so if it doesn't provide any further support, then it's going to target this 107.55. So, but in the meantime, looks like dollar yen has signaled a reversal. In the short term, on a weekly time frame, you can see that there's a bearish close, although there's some buying at the 108 level. Okay, so it'll be interesting next week to see what the follow through from this reversal signal is going to be, and we'll follow up on Tuesday for the daily analysis for all these key majors and pairs. Also check out my other video on Euro, Cable and Aussie dollar, as well as the Ichimoku analysis for Euro and Cable as well. Meanwhile, have a good trading week and cheers.